Snipers, you have to see what's happening to the Bitcoin price this Wednesday as we have a lot to look at with volume today. Notice how we have this 100-day moving average at 40,000 US dollars that is sort of holding right now. We haven't seen any daily bodies below this level, and we did actually get below 40,000 yesterday, coming to a candle low of 39,600, opening up this range to 38,000 US dollars. And now we're seeing a garden variety retest of a previous support now as a resistance, which is currently sitting just at where the price is right now at 45,500. So I had to get this video out to you guys because this is a very critical area for Bitcoin, and the real range that I want you guys to keep in mind for Bitcoin right now is going to be this $38,000 level, because now with this body of this daily candle below 41,950 inside of the range, it opens up the door for price action to get to 38,000. And notice how below 38,000, we also have 36,500 and 34,788 as very key levels, where if the price does get to 38,000 and we don't see the type of volume on the micro timeframes that could assume a short-term bottom, the likelihood of Bitcoin coming down to this $34,788 level becomes a lot more likely. So over the next few days, maybe you might have to remind me in the comments below, we really want to pay attention to the volume on the micro time frames. And so we're definitely going to do that today, as Bitcoin has seen the push back up to test a previous support as resistance. But keep in mind, 38,000 and our resistance for this range is at 44,800. So 41,950 is also a range that we could potentially see as a support level, but we cannot assume that until we have a full daily candle above 41,950 to call it a support level in a range. But for now, the range has opened up to 38,000. So this means it's going to be a lot more volatility for Bitcoin, because this range now is about a 15% range. And of course, we have these two levels below 38,000 at 36,500 and 34,788 that could easily come on the table if we stay in the range below 41,950. So that is just what I want to throw from the start here, and we'll talk about altcoins and the other revolving parts of the cryptocurrency market so that we can get a four-dimensional view of what's happening. But knowing that 44,800 and 38,000 is the range that we're in, let's first go on to the 6-hour chart. Look at how this volume is coming in. We're having a rise of sell pressure, and we have a descending amount of buy pressure so far. And so that's obviously not a good thing if we want to assume that this is a short-term bottom from the downside that we've been seeing since Bitcoin was able to get above 49,700. We saw a weekend fake out that took us to around 54,000 before dumping 20%. And now if we look at the move so far from this recent top on the 6th of September till here, we're 25% down. And so that could already be considered a corrective move. However, we have to now watch the volume to see, since we've come down from that level, we have not seen any buy volume on the 6-hour chart, where we know institutions love to import their volume throughout this whole period that we've seen, since that 19% drop. So we haven't seen any buy volume equate to that. That's one thing we would want to look for if we want to assume a short-term bottom, because this is what started it. So we want to see something similar to assume that it's going to end it, right? And so we haven't seen that type of volume in the 6-hour or the 4-hour. So if we go into the 3-hour chart, this is where it starts to get a little interesting. We did see a good amount of volume come in at 43,000 that we talked about from the market structural support that held Bitcoin in the range of 44,800 and 47,000. But then we saw the real institutions come in and the whales push and drive price down below 41,950, and that indicated to me that they wanted to clear this range. They were already willing to sell Bitcoin at 40,000, and I said yesterday the likelihood if we come back down below 41,950 to break even further down was highly likely, and that's exactly what happened. So we got below 40,000 now. So we're just slowly clearing this range to 38,000. Notice how there's such a small gap here left to 38,000. So if we want to assume that there's a bottom forming here, we need to see some volume. And if we don't, the likelihood of us coming to 38,000 becomes more likely. So we haven't seen anything crazy with buyers so far, going from the 6 hour to the 4 hour to the 3 hour. We go into the 1 hour chart. You can see this is really where we saw some buyers come in. Remember this rule that I told you guys? At the midpoint of our ranges, we have our support and resistance in red for our channel. And a lot of times the midpoint could also be considered a level where we're going to see buyers and sellers. And that's exactly what happened here. We got to the midpoint of this range. So before we got to 38,000, we saw some volume coming on the 1 hour chart, but it wasn't anything significant and definitely not enough volume to justify price action now above 43,000, where we have this market structural resistance. And so we really have to ask ourselves, what game are institutions playing right now? And it looks to me like they like to come in, they clear these ranges, and then when we come back to the range, they're able to drive price even further down. They're really trying to get the price to a certain destination. The question is, have we reached that destination? So we go into the 15-minute chart. This is where it gets fun. We start to see why we're seeing some sideways price action now. Volume came in as soon as we got below 40,000. And you can see it was really that $40,000 level where there was a wick, maybe that triggered that, the buy limit orders that were already on order books and things of that nature. So now we see drive price up, or the price drive up, because the path of least resistance is always sideways to a little bit higher. And now we're just having a cup of coffee at 41,950. So that tells me right now that because we're having a cup of coffee here, and this volume that we saw when we came to the midpoint of this range was not anything significant to the point of the type of volume that brought us below this range, tells me that this is not the final destination for Bitcoin. So this cup of coffee right now is very important. So at this point, if we cannot get above 44,800, and I'm giving Bitcoin some breathing room here because initially we said the monthly open at 47,000 if we want to assume further upside. Now, if we can't get candles above 44,800, then it's going to be very tough for Bitcoin to get higher price levels above that. And so until we see 44,800, my assumption is they're coming to target this market structural support at some point or another. Timing is the hardest thing to predict, and that's at 36,500. And if they move the price sideways in this range, they can do that for as long as they want. The question is, when are they going to get the price to the destination they want, and when are we going to see the volume to justify that? And if we go into the 3-minute chart lastly, and then we'll transition into altcoins, you can see here we did see all this volume come in, this buy volume, but if we really extend this chart, notice how much sell pressure is coming in. We have not seen buy pressure equate to any of this type of sell pressure. So micro timeframes are also indicating that there is a lot of bearish pressure in the short term with retail, and then of course institutions seem to be playing their game as well. So that's what we want to monitor here for Bitcoin. The most important thing to realize is the range has expanded, which means more volatility, and that's 38,000 as a major support and 44,800 as a major resistance that if we can get above, we can now start talking about upside and some potential targets to the upside. But notice how Ethereum yesterday was funny because it started to perform a little bit better than Bitcoin, but then it just kind of crashed. And I told you guys that above 65,000 Satoshis with the Ethereum to Bitcoin chart, this could be a very volatile range for Ethereum. And so the Ethereum to Bitcoin chart, notice how it saw this quick push down, this quick push up, and depending on the timing of what, where Bitcoin's price is at, this is really a very short-term volatile asset. We could see Ethereum slightly outperform Bitcoin in certain phases, but for the most part, when we look at, let's say, the daily chart where we can start getting more of a macro picture, we're seeing daily lows continue to be formed for the Ethereum to Bitcoin chart, indicating weakness. This 65,000 Satoshi level is important for me. So this is what I'm watching for altcoins. If we get above or below 65,000 Satoshis, the reason this is a big concern for me is what I'm going to start saying is not only is Ethereum not going to be performing as strong as Bitcoin, but I believe other altcoins, especially the ones in the top 10, the top 20, are also going to follow that path being the fact that Ethereum to me is a leading indicator of the rest of the altcoin market. So 65,000 Satoshis is significant there. We want to stay above that, but we don't want to assume that opinion. And so the total cryptocurrency market cap chart on the daily really looking like it topped out here with this lower high with this new leg down. And so that's a food for thought, coming down to 1.78 trillion. We break below this, now we have a very volatile range that takes us to 1.13 trillion, and that's going to be a very big downside push for Bitcoin. And assuming this happens, I think a lot of altcoins will bleed out into Bitcoin, and that's why this could continue the strength that we're seeing now with Bitcoin dominance at 42%, looking like it has double bottomed. We don't have a confirmation yet, but we have not broke the previous May lows of Bitcoin dominance, and the DXY did already double bottom. The thing is, Bitcoin dominance, notice how the 20-week moving average is at 44%. We're not at 44%, we're at 42%. The DXY, though, is above its 20-week moving average. It's been above its 20-week average, and guess what? It has also double bottomed to get there. And so, being a very correlated chart, are we assuming Bitcoin dominance also increasing? That would be in line with Ethereum to Bitcoin not performing well, and Ethereum dominance failing to form new highs from the May highs, and that also is a bearish opinion on the macro. And then same thing with the others, with Ethereum and Bitcoin excluded from the altcoins on the top 100. That's also showing weakness with a failure to form new highs here. And so this is all food for thought here. And so with Ethereum, the point is here, it's a leading indicator for these altcoins, and below 34.54 we have the support of 1980, not 2000, not 2500. 34.54 and 1980 is the range. In between that range, Ethereum can flirt as much as it wants. It's a volatile asset, and so expect that. What we really want to watch is the Ethereum to Bitcoin chart. It will give us more clues. And then to wrap the 4-dimensional analysis, let's look at the DXY. We might have some time to buy ourselves, and Bitcoin could see some sideways price action if this does not break above 93.82. Could we say that we have maybe a head and shoulder pattern here on the daily chart? Who knows? But what we could say is that this is in the early stages of a reversal from the double bottom, and that if we continue to see strength above 93.82, that's where we want to start being concerned, because that is where I'd expect the S&P 500 and the cryptocurrency market to really react to the strength of the dollar. And we're already seeing that slightly here with the S&P 500 now below the 50-day moving average, finding support at the 100-day moving average, which it's done in the past. But the question is it going to get back above the 50-day moving average? We saw this right before the start of this year, but we haven't seen it since the year has started. The S&P 500 has come below this 50-day moving average to test the 100-day moving average. So we really want to monitor this. We get above the 50-day moving average, that could buy the cryptocurrency market some time. We can start looking at some upside scenarios. That gives the cryptocurrency market a lot more of a healthier environment. But if we start to break below this 100-day moving average at 4,300 for the S&P 500 E-mini futures contract, that could be a huge concern for me, because that would assume a very negative environment for the cryptocurrency market to see upside. And commodities are pretty stale right now with U.S. oil and gold, so we're not going to cover that. And Japan is not doing anything too impressive after it came up to really test the previous highs from this year. So that is showing just kind of some more stability there with traditional markets. So very interesting time, snipers, and it's going to be exciting to see what happens here with Bitcoin. Really this $44,800 range all the way to 38,000, with 41,950 sitting right at the 50-yard line in the middle. It's going to be an interesting and volatile period here over the next few days, in my opinion. And so we'll continue to watch that. And I am here in Greece, as some of you may know. I'll show you guys a little bit more of a view here. Hopefully you can see. Wow, what a beautiful place, right? If you guys want to see some of my content here, you can follow me on Instagram at Naeem. It's just my first name. And with that, thank you all for tuning into the Snipers channel today. Hope you enjoyed today's analysis. And I'm going to get my workout in. Until next time, Snipers out.